We are now living in truly historic times. We are breaking records every day for better or for worse, but it seems to be desensitizing people to how shocking the data truly is. Millions of people are out of work, but we just ignore it because, don't worry, it'll be fine. We look at companies literally bringing expectations of revenue to the floor and then beating it and sending the stock surging. Stock buybacks for tech companies are still abnormally high, central banks are devaluing currencies, and more debt than could ever be paid back. What a wild ride this is. You came here for the truth, so let me unveil that for you. Today we're going to look at a very serious and unfortunate economic circumstances that are taking place today. This is multifaceted. This is coming from all directions. We have to look at this not just as it affects the United States, though I will show you information today related to that mostly. This is hitting hard no matter where you look at it. You have to understand that it's not just one person, it's not just one community, it's not just one industry or anything like that. It is widespread. It's a problem everywhere to different degrees. And of course, as I always mention, understand the ripple effect. We're going to talk about that more today. I have an extremely large amount of data to get into. I'm going to try to move through as quick as I possibly can. I say that every time, and most of the time I go over, but let's see what I can do. 1/3 of U.S. restaurants face permanent closure this year. This is an extremely important piece of information, and it really goes in line with what I've talked about, the stuff coming out of Yelp, the other stuff coming out of Coresight, and you look at this as well. Different analysts, different consultancies, agencies, and all this in this case here. So many different groups have talked about this. They've looked at the data, they share the information that they have and what they expect to occur, and no matter which source you take, it's either extremely bad or worse than that. Understand, I see this all the time. You're using this website as your source. That's terrible. They don't tell the truth. You're using this website. No. In this case here, the source isn't Bloomberg, okay? They are simply quoting this restaurant consultant. Like I said, we don't know if this is going to be the case. We'll only know after the fact. But when you start adding up all the pieces, that's why I like to take information from multiple sources, because you can then get a more accurate picture. One guy said this many, the other guy said that one. Put the two together, you start to get a good picture of how it's going to be. A new forecast projects that 1 in 3 U.S. restaurants may close permanently this year. The situation is decimating an industry that employs millions of Americans, one of the biggest in the United States and many other places around the world, in fact. As many as 230,000 of the nation's roughly 660,000 eateries will likely shut down this year. Restaurants have already shed millions of jobs this year, and it is truly unfortunate to find out how many people are unable to sustain their way of life as it is. And they lose their job, they get their hours reduced, other problems that we've talked about here, not good at all. Where expiring $600 unemployment checks will hurt the most. This is coming out of Bloomberg. Millions of Americans are dealing with a shock to their incomes this week. The expiration of $600 weekly federal unemployment benefits at a time when the jobless rate sits at levels not seen since 1940. If you have the time, I would highly recommend to check this out. There are a lot of images that you need to see. It breaks it down in various forms. Highly recommend it. You have to understand that this isn't equally affecting people. That's why I see in the comments, I see the news articles, everything's fine where I am, business is booming, everything's fantastic. Okay, that's fine. Great. That's a good thing that you're not being affected by this. But guess what? Millions of people, they are being hit hard. Millions of people didn't even recover from the financial crisis. How do you think they're doing today? Not very good. Analyst, Las Vegas recovery may take 18 to 36 months. This is very big, of course. And you look at the ripple effect, this is one of those places where it is very clear. If the casinos are closed down, what's going to happen with the restaurants? What's going to happen with the other businesses? You don't have those tourists. Everything just piles on top of each other. And of course, businesses will close down. People will lose their jobs. You've got a worsening economy, and it takes time time to rebuild that back. It's not going to change overnight. In this case here, they're predicting 18 to 36 months. We'll see what happens with people's travels and tourism and so on. But I think it's important to highlight something, and that is there are certain areas, not just in the United States, but look around the world. If you're going to invest in some real estate, perhaps, maybe you want to open a business in a certain area, there are places that are truly boom and bust, okay? Kind of like the stock market, the sine wave. Think about what's going on with shale. When you look at oil, certain towns, they are doing very well when the price is riding high. And then suddenly, when it goes down to basically zero or negative, as we saw, everything falls apart. The real estate in the area takes a nosedive. You've got problems with the economy going on in general because all the jobs are suddenly gone. That joblessness, the unemployment becomes a heavy burden. It's just one thing after another. This happens in Vegas like nothing we've seen before, of course, but it could happen with oil and any other industry, really. This time around, it seems to be impacting so many for different reasons. Dunkin' could close 1,150 global locations. So we're talking about 800 in the US, the remainder being from around the world. Starbucks is closing locations. I mean, we're looking at so many different types of businesses that are closing down. At each of those locations, you've got people that relied on that paycheck. Suddenly they're not getting it. That means that these people are not going out there and spending their money at the stores. You could see in the background there, they're not going to be able to do that. That's going to have an impact on their locations. Those are probably their regular customers coming in. This is truly a big deal, what we're seeing today. Here's another example. California Pizza Kitchen files for bankruptcy. This is just another one. I think they had something like 200 locations. Usually what happens is they close the worst performing stores, they liquidate their inventory, they sell what they can, recuperate some of the costs, try to slim down, try to make everything more concentrated, and hope that they can make it through this. A lot of companies unfortunately don't. Small business owners are leaning on credit cards to survive. You know, you've got a problem when you're willing to spend so much money on the interest because you have no other option. For more than 1/3 of small US business owners, keeping their ventures alive is coming at a high personal cost. Government loans through the Paycheck Protection Program have helped support some businesses, but the accumulating months of reduced revenue are forcing entrepreneurs to buoy their own businesses with their personal assets and credit. Many have already succumbed. We've got a big problem here, not just for what's going on with these businesses. This affects real people too, regular people that are unfortunately going further and further into the hole. And despite what I've seen with the data showing that people have been paying off their credit cards, I think a lot of people are going to be in really bad shape. All right, so this is really, it's hard to talk about, but we have to consider this because a lot of people are affected by it. Food insecurity for US households last week reached its highest reported level since the Census Bureau started tracking the data in May, with almost, can you believe it, 30 million Americans reporting that they had not enough to eat at some point in the 7 days through July 21st. And it's some heavy stuff, that's for sure. So I don't think I'll go on talking about this anymore, but you get the point. Read this article out of Bloomberg if you're interested. Let's move on. US gets a debt warning from Fitch as stimulus battle rages. No matter how much money this country spends, it doesn't really matter because there will be money flowing in. And if the money stops flowing, as we have seen in certain instances where foreigners stop buying up the debt for different reasons, could be the strong dollar, could be problems geopolitically. There's so much going on, but the Federal Reserve will be there to buy it. They will hyperinflate the currency. We know they will do that. Ben Bernanke has his speech back in 2002, deflation, making sure it doesn't happen here. They are clearly going for that today, printing $3.5 trillion in a matter of a few months. There's no stopping these crazy mad scientists, but here we are. One of the world's major credit rating companies fired a warning shot regarding the US's worsening public finances, saying that they revised their outlook on the country's credit score to negative from stable, citing a deterioration in the US public finances and the absence of a credible fiscal consolidation plan. The country's ranking remains AAA. That's fantastic. I'm sure this will have absolutely no impact on the financial system, whatever, because it's just all nonsense at this time anyway. Take a look at this. I thought it was interesting to see the money supply M2 year-over-year growth so dramatic right now, as we can see the helicopter money that's being dropped from the skies. It's actually just the beginning. We have not seen anything yet. This is really significant at this point, but I believe we're going to go a lot further, and the devaluation as a result will be unlike anything we've seen. If you take it back to what was going on in the 70s, things look a lot different from today, that's for sure. But what did the Federal Reserve have to do in order to stop that inflation? They rose interest rates to a historic high. That created a recession, that created significant changes within the system. You could suggest it worked very well, but of course the effects were quite dramatic. As a result of what's been happening with these central banks and with government stimulus and everything else, gold surges to record as week opens with spot price near $2,000. This could be the week where we see gold rising higher above that 2,000 mark. We'll see what happens. Ultimately, that just shows you that there has been a lack of confidence in paper, fiat, confetti, and unfortunately the confetti isn't worth the paper it's printed on because people can't really get much out of it. That cash is literally a piece of paper. You want to hold something which will be worth more tomorrow. And if you believe that that cash is going to lose value, you will trade it in for something that holds value. You could argue what the best asset is. I know a lot of people, they only invest in one thing, and that is paper assets. They don't understand the rest. They stay away from the rest. A lot of the financial advisors certainly are not diversified at all, even within one asset class, never mind. But it's just interesting to see what's been going on with the central banks, with the money printing, with the debt, the deficits, and all of that, and how it's been affecting the price of gold. Two things really quickly. Bank of Ireland to charge people for holding their pensions. This is huge news when you can see all of these different countries going to negative interest rates, taking from people in one way, shape, or form. They do this over and over and over again. And the average person doesn't know what to do. They can't handle it. They can't pay their bills, and things only get worse for them. This right here is shocking. I couldn't believe it. When you go into the actual article, highly recommend this one. We're talking about central bankers. Two ex-Fed officials have a faster way to distribute money in a recession. These two individuals say that recession insurance bonds could activate payments and bypass political wrangling in a crisis. That's right, print money and indirectly give it to individuals. This is helicopter money, and they use these convoluted and complex systems to do it. Why? No practical reason, of course, but just like any of the derivatives, just like any other systems that they create, it's always to enrich their friends. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. All you got to do is click one button. Thank you. If you want to check me out on Instagram and Twitter, please do so at The Money GPS. If you want to learn how to sell stuff online, e-commerce, it's a growing trend right now, and you can capitalize on that by going to the AmazonGPS.com. If you want to understand the financial system, you want to be able to ask the right questions, you need the knowledge. These two books will give you everything you need. Check them out at the link in the description. If you want the audiobook, themoneygps.com. Wait a second, don't go anywhere. A lot of detail in this very important video. Check it out. I will see you there.